Hey everyone, welcome back to your weekly market outlook. This is for the 10th to the 14th of July 2023. Let's take a look at what's been going on last week. A start of the week. Last week was pretty much a quiet week. We've got the 4th of July holiday in the US, so we don't have a lot of volume going on in the market, but once the FOMC meeting minutes kicked in, kind of give us a little bit of confirmation in terms of what the FOMC could do. And then we have the employment numbers, obviously, that's going to come on Friday. We have the ADP NFP numbers. This one is a surprise to the upside, but again, ADP NFP numbers is never a good indicator of the official NFP numbers. We've got the weekly unemployment claims. This one here, a little bit higher from 236,000 to 248,000. This is above the consensus of 247,000 for the weekly unemployment claims. Now, the total average weekly unemployment claims actually went down a little bit, so this contributes a little bit onto the unemployment rate later on. We've got the JOLTS job opening numbers. Again, this is a good indicator of what's really going on in the job market. We have a number that's actually below the consensus. We've got 9.82 versus 9.93 expected, and then obviously the NFP numbers. This is going to be the key driver. So let's touch base a little bit on the average hourly earnings. This one went up 0.3% to 0.4%. It's a little bit of an increase, but it's still an increase. The unemployment rate went down from 3.7% to 3.6%. This one here, it's not really a surprise because we've got the running numbers for the weekly unemployment claims actually coming down. The 4-week average was down. The yearly continuous was also down for the unemployment claim. So for the unemployment rate to go down from 3.7% to 3.6% is actually not really a surprise, right? The NFP numbers, the expectation was 224,000. Now let's break this down a little bit, okay? The previous number for the NFP number, although what you're looking at on the screen is 306, this number is actually a revision, downward revision from 339,000. And then the actual NFP numbers missed consensus by about 16,000, right? 224,000 to 209,000. Now the difference is this. The downward revision was actually revised down 33,000. The consensus missed by 16,000. So overall, it's actually not a bad NFP number because the downward revision was still much larger than the missed consensus of 209,000. And in addition to that, 200,000 NFP above 200,000, that's still considered to be a good number. So overall, it's actually not a really bad employment number. So obviously, the initial market reaction that we're looking in the market right on Friday was really a push towards a weaker US dollar. Now that's really for a separate reason, and then which we're going to take a look into this week's calendar. But the weaker NFP numbers was one of the main drivers why the US dollar loses its footing on Friday. Now, it might look extreme, but it actually not is extreme once we take a look at the technical side of things. So be a little bit more careful when taking into account all these numbers together. We've got a lower unemployment rate. The NFP number was, although it was down below consensus, it's still not that much of a drop considering the revision that happened for last month's number. So I think it kind of still adds up. So we really still have a tight labor market in the US, so it's actually not doing that badly. Now let's take a look at this week's calendar. Obviously, we have the RBNZ, not expected to change rate. They're likely going to keep it flat at 5.5%, which is pretty high for New Zealand. And then we have the US CPI numbers. Now, the US CPI numbers, if you take a look at the headline CPI numbers, 4% to 3.1%. This, again, it's another wild expectations from the market, but so far, the market has actually... the result has actually been beyond what the market is expecting, right? So we've been getting a little bit of an overshoot in terms of how fast the inflation has gone down. So the expectation right now is from 4% to 3.1%. So if this was something that happened about 3 months ago, I would probably say, yeah, this is one of those crazy numbers. But what has happened in the past 3 months, I don't think we were looking at this number and say, hey, this is not a crazy numbers. But again, a drop from 4% to 3.1% is very significant, because we're quickly approaching that 2% target that the FOMC is intending to achieve. Now, are we going to get a 3%? We could get a 3% to 3.5%. Now, that's kind of the range of consensus for the CPI numbers for this week. So again, if this number is true, if we get that drop from 4% to 3.1%, then there's going to be a higher chance that the FOMC might need to kind of reconsider the second interest rate hike for 2020, the second half of 2023. I think we're still locked in for a July hike in 2020 for this month. I think we're still locked in for another 25 basis points hike. However, if the inflation number goes down as expected to 3.1% or potentially towards 3%, despite the FOMC hiking 25 basis points, I think what that's going to explain to the market would be the FOMC needs to hike very quickly, maybe one last time, 25 basis points hike, and then they might actually pause for a little bit and use the extra 25 basis points towards the end of the year, just in case the CPI number goes up, right? But the FOMC is still going to take that inflation number back down to 2% as soon as possible. So that's not going to stop the lower CPI number is not going to stop the FOMC from hiking 25 basis points in July. So I think we're still going to get that 25 basis points hike in July. But again, the headline inflation, a drop from 4% to 3.1%, is very significant. If this if this pattern continues, we get a percentage drop every month, then we're likely going to get back to that 2% target within the next 2 months for the US. So we'll see what happens there. Other than that, not really major news coming out. We've got the PPI on Thursday. We've got the UK GDP numbers, but that's pretty much it. We've got the Canadian rate rate decision. If you take a look at the consensus for this one here, we're expecting a 25 basis points hike from the Bank of Canada. All right, but that's pretty much it. From fundamental side of things, I think what we need to watch out for is definitely the CPI numbers, and this is where it comes into the technicals. Now, if we take a look at the technicals here, this is the dollar index, very well supported at 102. Now, we saw that drop happen really quickly, right? From 103 just right down to below 102.50 pretty much on Friday, just on the back of the NFP numbers. But if we take a look at the whole situation, we're basically still constrained between 102, 102.50 and 103.50. We still got support at 102. Unless we break 102, I think we could see a dollar that's kind of going to be more of a range bound in terms of how it's actually going to move. But if we lose that 102 numbers, then yeah, the momentum does suggest that we might point lower towards the dollar index. We might see that drop towards 101.50, back towards 101, and this is actually replicated into all of the currency majors, except for dollar yen. Obviously, that's a different case story. But anyway, with the Aussie USD here, if we take a look at the Aussie USD, the gain has so far, even on Friday, been capped at 67 cents, right? We are likely going to maintain that range between 66 cents to 67 cents intra-week wise. We're taking a look at a pivot around 66.70. We are also looking at support one coming in at about 66.25. So we do anticipate price to just stay within this range for the Aussie USD. A break above 67 cents, that's going to be met by resistance at 67.50, and ultimately we still have 68 cents capping the market for the Aussie USD. If we take a look at the Euro USD, this one here, sure, we have kind of moved away from that range, 1.0850, 1.09 support range. We moved away from that, but we're still capped by 1.1. Now, only if we break 1.1, then we are likely going to see the Euro USD track higher, but we still have resistance coming in at 1.105, and then ultimately we still have 1.1 capping the market. If we take a look at the 1.1 level, that's basically the May high for the Euro USD. So this one, it's still it's a little bit too iffy to call this a potential bounce, a potential run up towards 1.1 at this point in time. Just be mindful, we still have that CPI numbers which could really drive the Euro USD, or it could really reverse the Euro USD depending on that CPI number. If we don't have a very significant drop on the Euro on the CPI numbers, let's say we've got a number that's maybe higher than 3.5%. That could be bad news for the euro, the Aussie, and that would be good news for the US dollar. So this one here, I think the market is going to be a little bit more cautious now, because there are a lot of technical levels to watch out for. Those are the technical levels to watch out. And in terms of support for the Euro USD, we're still relying on that 1.0850, 1.09 range as a very strong support on the Euro USD. With the Pound USD, this one here, we did post it out, a little bit of an outlook on the Pound USD, considering that there's a bullish flag happening on the Pound USD. I think in terms of how far this one is likely going to go, we've got pivot at weekly pivot at 1.2780. Price is currently trading above that. I think we could potentially see this one touch higher once it breaks a certain level, and that certain level is 1.2850. so we're still capped by 1.2850, but I think a move above at 1.2850, we're likely going to see the Pound USD continue towards 1.29. I think the 1.29 level is still a projected target for a lot of swing traders on holding along onto the Pound USD. In terms of support for the Pound USD, we're looking at support one coming in at about 1.2725, 1.27. This is likely going to hold the pair from sliding even lower. But below that, obviously, if we saw that break below 1.27, then we're likely going to just see that very quick drop towards support to roughly around 1.26 for the Pound USD. But daily wise, I think we should anticipate a little bit of a drop lower, maybe towards 1.2775, 1.2750, and we could potentially see intra-week bounce towards 1.29. But again, really dependent on what the CPI number is going to be from the US. Though Japanese yen, this one here is a little bit unique. There was a little bit of a sell-off. There was a stronger gain in the Japanese yen. Now there are a few factors. We weren't quite sure what it was on Friday, but now over the weekend I've gone through a lot of the stuff there. But wages has gone up for the month of May in Japan, and that leads to the potential for more of a cost push inflation for Japan. That, basically a lot of traders are just thinking right now, the numbers are good, it's picking up, wages is finally going up, and I think it's probably time for the Bank of Japan to get rid of the YCC. So there was rumors swirling around the YCC being removed in July or August, and that's basically what's really driving the market down last Friday. That's really more from the fundamental side of the explanation kind of things. But if we take a look at it from a technical perspective, we have reached that 145 level, and we saw that a little bit of profit taking from 145. We even got sellers coming in at 145, and the issue about intervention and stuff like that does really spook the market, especially in the yen crosses. We have seen that drop. Right now we're trading below 143. In terms of support for this one, we're still going to be looking at 141. We got a little bit of an intermediate support at 142. We might see a little bit of intraday buying at 142. But in terms of whether or not it can actually lift it back up above 143 is yet to be seen. Again, this is going to be highly dependent on the CPI numbers, and in terms of how the market interprets what the FOMC is going to do with that CPI numbers that's going to get released on Wednesday. All right, so the Dow Japanese yen, to me, this one here, in all honesty, I think this is still an uptrend. We're just looking at a little bit of a correction now, whether that could be a fear-driven correction, intervention-driven correction, or it's really more on the fundamental side of things. It doesn't really matter. We are looking at that correction, and from a technical standpoint, I really want to see this correction go down a little bit lower. If we see that move lower towards 141, then it gives us a little bit more of a reason to go in long on the Dow Japanese yen again. But at this point in time, if we're thinking of going short, the Dow Japanese yen status a little bit unknown, because we still have that support at 142, and we're a little bit too far in terms of placing our stop losses above 145. So be a little bit more cautious for the Dow Japanese yen. I would use the Dow Japanese yen more as a guidance if you are going to be trading the other yen crosses, for example the Euro yen and the sterling yen. So that's pretty much it for this week. Good luck with the trades. Don't forget we have that key CPI numbers on Wednesday, and I'll see you soon.